Hello, everyone, and welcome to the Day Trading AMA, Ask Me Anything. So I have somebody that I know pretty well, of course, not personally, but online. This is not just somebody, this guy, MyDailyGains. He is a professional day trader in the stock market. So just want to go through kind of my background a little bit and how I ended up, my world kind of colliding with MyDailyGains. Because he's not just some Twitter trader that I found. He's actually somebody that is vetted and very much qualified to give information about the day trading world, because it is actually a real one. It's not just Lambos and fake gold watches and just lying and hypocrisy. So with that being said, back in January 2018, this is when the first crypto boom was at its zenith. So about October, November, Bitcoin was like $8,000, $9,000, $12,000, and it spiked all the way up to $20,000 in January 2018. So I myself at the time, I was 27. I was 27 years old. I had just, in my career, I was starting to so I'm a millennial. I was arriving into money into my career, and I'm trying to find ways to grow my money because I'm making more money, so I want my money to grow. So you guys know me. I'm Nils. I'm the co-club captain of the Get Money Club. I'm very interested in stock market trading. That started off with me back in 2018. I was trying to do day trading in the cryptocurrency markets. So just to put some things aside before I continue, one, if we ended up if this channel ends up getting more than 25 people in it, we'll turn off the video to allow more people to join. Number two, I'm going to mention like the day trading service that I ended up joining that MyDailyGains is a moderator on and is a mentor on. The reason why I'm going to mention it is because it's actually part of my story. I'm not being paid to represent MyDailyGains. I'm not trying to bamboozle anybody. You guys have seen me long enough. You know, I've been around here long enough where you guys know that I'm pretty much a truth teller. And so I'm going to mention those things because they're part of my story. So anyway, so I'm going to share my screen a little bit as I'm telling this story. So January 2018, crypto starts taking off, and I end up going on YouTube trying to figure out how to day trade cryptocurrencies. I come across this guy, Tony Ivanov. So Tony Ivanov at the time was 22 years old, young guy, and I'm watching this video about how to day trade cryptocurrencies on Binance. Binance is a platform that you can trade cryptocurrencies. You can go from Bitcoin to Ethereum. It's a Chinese-based cryptocurrency exchange. So I'm listening to this guy at this time, right? So I was already interested in day trading cryptocurrency. I had already gotten burned by a charlatan online in the cryptocurrency space. I had bought a course, and the guy was teaching you how to do day trading. And in my mind, it was like there was just a lot of sketchy things. Like people wanted to see him do live trading, and he ended up putting like his friend. He set up his friend to do the live trading. So anyway, I paid for his course. By the end of it, like he shuts down everything. His website shuts down. Of course, no refunds. Like it was complete hypocrisy and lie. So at this point, I'm listening to this young man. I'm listening to Tony Ivanov, and I'm like, you know, I've just gotten burned, and I'm like, all right, like what is this? What is this dude talking about? Is he another one of these charlatans? But I'm listening to him, and I'm like, okay, like he's really speaking from an area of experience. That other guy, because I was so new at the time, I was like, you know, It's like P.T. Barnum said, "There's a sucker born every day." I was a sucker. And because I didn't know, I just got screwed over. So I'm listening to this young man, Tony Ivanov. So I'm actually still subscribed to him on YouTube. He's got a day trading community called TradeBuddy. So I ended up paying for the lifetime membership to TradeBuddy chat room. And so I'm just going to go show you guys there. I'm still in there. This is me. That's actually my name, but whatever. Joshua P. So what I saw was when I was getting in there and I was interfacing with the community. So there's this guy in there, MyDailyGains, and this is current information right here. This is today. So this is who we're talking. So MyDailyGains, if you can just say hello.
Hi everyone. That's me who he's referring
to. I'm sorry. What was that?
So that's me that you're referring to.
Yes. Yes. So MyDailyGains, this guy, he's posting every day before the market opens, right? So like we're looking 9:18. The American stock market opens at 9:30 a.m. Eastern Standard Time, and he's posting his plays before the market opens. So like let's just look at let's look at Friday, March 26th. 9:18 before the market opens, he's mentioning his plays, PRQR, 9.5, 10 key levels to look for, rejection, blah, blah, blah. It doesn't matter necessarily what this all means, but he's posting what he's going to do, where he's going to do it, and then in the daily recap section, if we go Friday, we go to MyDailyGains, PRQR. There was another stock he picked up, WAFU, but essentially he lost $57 on that. He ended up walking away from with $173 a day. So if you go back to I was looking at the daily recap channel. This guy, MyDailyGains, is posting every single day his profit and loss, and he's also talking about when and where he's going to get into and out of these stocks. So, like, I'm in this day trading community. I'm like, very few people are actually putting their money where their mouth is and actually saying this is what's going on. So I'm like really intrigued by this guy. Like, who is this guy? So I find out that he's a moderator in the community, and he's like a mentor in the community. So as I'm learning about day trading, I'm asking MyDailyGains, this guy who's in this chat, a bunch of questions. And, I just come across his Instagram channel. And literally, I spent like a good hour, 2 hours. I was scrolling in his Instagram feed, and I counted the days where he was up versus he was down. He had like a roughly above 80% win rate on the 4 out of 5 days of the week. He was a winner. So, like, what was your actual win rate, MyDailyGains? Or actually, I don't know if you would like to share that.
It usually hovers between 75 to 82. But
okay. Is that per trade or per day?
I'm talking like on a monthly basis.
Oh, on a monthly basis? Okay, yeah. That's awesome. Yeah, so the reason why I mention this story, everybody, is because I'm not here to show you just some guy that I found online just so that we could talk about day trading. Like, I'm here to show you somebody who has clearly been vetted in the sense that he's a winner, and he's shown that he can win while stating these things in advance. All that being said, guys, this is MyDailyGains. He's a pro. He's vetted. He's literally one of the very, very few people online who actually talk about their daily profit and loss reports. MyDailyGains, what the heck is going on? I've been looking at your Instagram for the past few months. You have not been posting your profit and loss statements. Bro, are you losing money?
You know what? That's a good question. And well, the short answer is no. But one of the reasons why I gravitated towards no longer posting like daily on Instagram with that sort of thing is because I found over time that I was putting an unnecessary pressure on myself to succeed, like just for the socials. And it kind of affected the way that I was trading at a certain point where it's like, oh, this trade is going well, but if I just hold on for a little bit longer, it's going to look that much better on Instagram. And then the trade would go against you and that would turn into a losing trade when really you had it and it was going well. So I basically now just share that stuff like with the TradeBuddy community. But it doesn't mean that, for the public, like on Twitter and on Instagram, I'm still sharing the chart executions. So where I got in, where I got out. So whether that trade, because everyone's at a different stage in their career, right? So whether that trade for somebody is worth $100, if you're using more size, that same trade could have paid you $1,000, just as an example. So the dollar figure is not as important as the process. Like what was the thesis behind the trade? What caused you to get in and what caused you to get out at a certain level of the chart? So to me, the process became more important than the profits. Sure, I'll share the occasional here and there, but like I said, it was just putting an unnecessary pressure on myself to succeed. And when you're involved in a very tough business like this, you don't need those extra pressures for nothing.
So let's start with just a general question, and then we'll actually jump into the actual AMA Ask Me Anything question. So how did you? Where did you start with this? Like, because you mentioned going to Toronto with another career. How did you get into the day trading space? What gave you the confidence to make the leap? into this field, and why have you been successful in a world where a lot of people struggle with this craft?
Okay, those are all great questions. So the quick story is that in the fall of 2017, a buddy of mine was getting really involved in the cannabis sector stocks, and he was an early investor in that space. And he called me over and he gave me kind of like a presentation of all the big companies that were going to make waves in that field. And at the time, I really didn't know that much about stocks in general. I just had like some basic portfolios, the ones that the banks put together for you with like telecommunications and, blue chips and stuff like that. And so I did my own due diligence, did my own research, and I said, you know what, I'm going to take a flyer on this, put a little bit of money that I had from, other careers and real estate and that sort of thing, put it in the cannabis, a couple of cannabis stocks, and I watched the portfolio grow exponentially over the next couple of months. And I sat back and I said, wow, like this stuff is really possible in the stock market. That's pretty cool. Mind you, it wasn't a day trade. It was more like I said, like a longer term hold kind of thing. But I still saw the volatility from day to day. And so that holiday season, so fast forward to December, I'm taking 2 or 3 weeks. I'm researching all there is to know about day trading. I stumbled across Tony Ivanov myself as well, also joined as a member. And a few months later, I ended up becoming a moderator over there. Tony liked my approach and my performance. And when I made the shift into short selling, he thought that the community needed like someone who could lead the way for the short side, which is basically getting in at a stock higher and then getting out lower, which is the opposite of going long, which if you go long, you're buying low, trying to sell high. And I ended up getting into the opposite side of things.
Awesome. Yeah. So I do want to say this is a good time to ask this question, which is a lot of people who've experienced success in the day trading and the stock market space. A lot of people that have experienced consistent success, at least from what I've seen, reading books and stuff like that, a lot of people focus on the short side. That seems to be a big, heavy area of success. Like, what attracted you to the short side? Like, did you start off as a long bias trader? And like, what led you to the short side? And why do you think that there's so much success on the short side day trading?
Well, I did start as a long bias trader for the first few months, but I was in small cap stocks. So those are stocks that are priced between $1 to $10. They're usually companies that are struggling, that put out press releases in hopes that their stock price is going to rise that day or for the next few days. And, I was buying breakouts of these stocks only to get dumped on quite fast. And the more and more I saw that, the more I realized that, hey, if I just shorted this stock here instead of buying it, there's a better chance that I'll make money on the way down if the breakout gets slammed, if people are selling into the breakout. And so not so much now in the last like 1 or 2 years, like the entire stock market is just generally on fire. So stocks only are going up, it looks like. But in the small cap sector, which is kind of like a penny stock niche, again, the $1 to $10 range, these are very struggling companies. The companies are always looking to raise capital to attract retail buyers to buy their shares. Then they dilute, they add more shares to the company's float. And just if you look at any daily chart, so if you look at the last year or you look at the last 3 years, for pretty much any small cap stock, you'll find one thing in common with most of them is that they're all beaten down and that they all fail in the end. So those are kind of the reasons why I'm like, okay, well, I think I'll have more of an edge if I become a short seller. And then it's more than just thinking it. You start putting it into practice and seeing if it's actually going to work out that way. But as you said, yeah, a lot of the big traders that you do see on Twitter and Instagram in the small cap game are primarily short biased. There are a few long biased traders who are killing it in the small cap game, but I don't know, the shorts seem to do better in the small cap game.
Excellent. Yeah, so I'm going to actually jump into the AMA questions. Griff asked a wonderful question for a day trader, which is, what is your morning routine? How early do you wake up before market open to do research and due diligence?
Yeah, so For in the world of a day trader, routine and discipline are some very important factors. So every day pretty much looks and feels the same. We're creatures of habit. So, you'll wake up at 7:15ish. You'll go outside, get some fresh air. I'll walk my dog. I'll make some coffee. I'll sit down at the station around 8, between 8 and 8:15. And that's when you pull up the gap scan. So the software that basically scans the entire market for the small cap stocks that are 5% higher than they were yesterday, and it categorizes them by highest percentage to 5%. And then out of those, you start looking at the ones that have significant pre-market volume, and out of those, you look at which ones have news releases, and then you start analyzing from there. So analyzing the past performance of the stock. You may try and dig through the filings to see, how this company is doing. And so, yeah, that's basically the routine. It's the same thing every day. By 8:30 to 9, you have a good idea of what stocks you may want to trade for that day. And then you start planning out your levels, where you want to get in. And I don't know if everyone knows this, but being a day trader, you don't just jump into something blindly. What you have to do is, before you even enter that trade, you need to know a couple things. You need to know where you'd like to get in. Like, it's not an exact price, but it's an area, it's a small area where you'd like to get in. And then assuming you will get in, if it reaches that price, you need to know two things: where you will take the loss if you're wrong, and where you will take the gain if you're right. And where you take the gain compared to where you take the loss generally always has to be 2 to 3 times large. The gain has to be 2 to 3 times larger than what the loss would be. That's called risk reward ratio. Anyway, just get to finalize the routine comment. That's pretty much it. So you have that from 7 a.m. to 9 a.m. And then it's a matter of waiting for the stock to go where you anticipate that it may go before you enter. And then a lot of trading is just waiting around. The actual, you entering the trade takes a minute or two. It's everything else that takes hours.
So how do you watch these gap scanners, right? That give you the universe of stocks between the price of $1 to $10 that are up 5% on the day. So what time do you actually open up your screens, and how do you have enough time to limit the universe of stocks from, because it's usually that list is usually about 60 to 100 stocks, right? And then
right.
How do you isolate that down to 1 to 3 stocks? So quickly?
Quickly, yeah. So yeah, it happens fairly quick, because right away I eliminate anything that has less than a couple 100,000 shares of pre-market volume, which basically means if nobody's trading this stock pre-market, then why am I going to trade it right now or later this morning? So the volume tells you that there are other people actively involved in this, and that there's going to be more eyes on it. And what you want as a trader is you want liquidity. So it eliminates a lot right away. Then knowing your strengths and weaknesses. So knowing that I don't trade stocks that are under $1. So anything that comes up could be eliminated. And then anything that's above $15, I may also shy away from as well. And then knowing your own statistics. So knowing that I perform better in the $5 to $15 area, more so than the $1 to $5 area, I could already go ahead and eliminate, or at least narrow down further what I'm interested in. And then you read through the news. I'm a short seller, so if the news is very, very positive for that company, or it's phase 3 completion trial news, I'm not going to be trying to step in front of that as a short seller, because that's amazing news for the company. It's probably going to run. So I'm looking for news that's fluffy, a garbage type headline, terms of the deal not disclosed, or we may enter this, or we may do this. It's non-conclusive junk, which the insiders are trying to prop the stock and sell shares to retail, and that's when short sellers could really thrive. So yeah, stock selection is important. You don't want to be trading the wrong stock, that's for sure.
Yeah, it's amazing because I remember even months and months back, you used to mention that your sweet spot was I think it was the $3 to $5 range, right?
Yeah.
That was, yeah. So the fact that I remember you saying that, and so now you saying that it's the $5 to $15 range, that tells me that you've been tracking your statistics and your edge has changed. Like your market approach probably has changed a little bit, or you've gotten stronger in a certain area. So I think that's a lot of what people don't understand about day trading stocks is it's really about self-analysis and looking at your own performance and like removing your mistakes. So like hearing that and having that kind of like inside knowledge about your journey, I just want to express that to everybody because like this is work at the end of the day. Like there's work outside of like it's not just excitement. So I'm sorry, Sturjara. Like I know you're interested in day trading and stuff, but like day trading in its proper form, it's boring, right? Like it should be boring. Why should it be boring?
Exactly. If basically like if you're in a trade and like your heart starts racing really fast or you're feeling very emotional or that sort of thing, then it means that your entry was bad, or it means that you're using too much size. So you're using too much money, you're risking too much in this trade. If you're in a trade and like you're as calm as you are at any other point in the day, that means that you're using the right amount of capital and you've already accepted the risk. Because every time you enter a trade, you're pre-accepting the fact that you might lose X amount of dollars. And you have to have a system in which you trade systematically, because if you don't, then you're kind of just, throwing money at something and hoping. And that's definitely not a strategy. So you have to create rules for yourself. You have to follow those rules, and you have to build from there and try your best not to break your own rules, because that's in a world of unlimited possibilities. The rules that you create for yourself are all that you have.
Wow. Very wise. So Derek the Forsaken asked this question, which is, there are YouTuber trading courses that I feel are shady. Do you think some of these YouTube traders fake their profits in order to get people to buy their courses?
I do. I do think there's a lot of that going around. And I do follow a page on Twitter called Guru Leaks, and they're pretty good at the expose type thing. Yeah. But I mean, that's the thing. Like these people that are posting like, I don't know, $50,000 a day gains or whatever, it's hard to know if those kinds of things are real. I mean, you could ask for broker statements, I guess, before joining a community. But yeah, you definitely want to do your due diligence before joining any communities. They've been wrong before. Like they tried to bring down, like, I don't know if you've ever heard of JTrader. He's like a short selling community. Guru Leaks tried to bring him down, tried to call him out, but myself and many other people know that he is in fact a legitimate big time trader. So once they realized that they were wrong, they removed and deleted all those tweets, I believe. So
wow, that's amazing. Dang, the people came to his defense. That's legit. So Valency has a yeah. Go ahead. Sorry.
Oh no, I was just gonna say like the people like the Tim Sykes and the Ross Camerons and those types of people, they do trade like real accounts, real money, and that sort of thing. But what people have to also know is that when they announce like a position, they have like 1,000 to 2,000 people piggybacking off of their entry. And so they have like an easy way to exit their stock. And I'm not saying that it's done on purpose. I'm certainly not saying that they are fraudulent. But what I'm saying is that, especially like if you're going live on YouTube at 9 a.m. and you have 5,000 people watching your stream with a 15-second delay and you're saying, hey, I'm getting long at $9, thing rips to like $9.50. It's an easy sell for that person. So you want to be careful on that sort of thing. Don't buy alerts is basically what I'm saying.
Awesome. Yeah, so Valency has a very fundamental question, who we have not asked, which is, what is day trading?
I guess that should have been the first question.
Right.
And my apologies on that one. But day trading is basically the act of buying and selling a it could be a stock or, crypto or futures or anything. In my case, it's a stocks, buying and selling within the same day. So a trade could last for a few minutes. It could last for a few hours. But essentially, if you entered a position like between 9:30 a.m. and you exited before 4 p.m., that's considered a day trade. Obviously, there's exceptions to the rule. Pre-market starts, 4 or 7 a.m. After hours goes all the way to 8 p.m. But typically, that's what a day trade is. And then after day trading, there's swing trading, which is you're holding between 2 days to generally a few weeks. Above and beyond that, it turns into what's considered a longer term investment. And then within day trading, you have different styles. Like scalping is literally you're in and out within seconds sometimes.
Excellent. So Valentin has a follow-up question to that, which is what data do you base your day trading on, or is it just pure luck?
That's a great question. And the data is kind of I guess it's twofold. One is the data that is in front of you regarding the stock itself, which is in the form of technical analysis. So basically, technical analysis is you analyzing the trading history chart. So in my case, like the last 1 to 3 years, and then more specifically, the last 5 days, if it's a multi-day run, and then more specifically, the pre-market session. So what's going on with the stock this morning before the market even opens? Where is it topping out? So that's data for the stock itself. And for your own data, so basically analyzing your own trades to identify what setups are working for you more so than other setups, and then narrowing in on the stuff that works and expanding on that, and then trying to cut out what is not working, trying to cut out where you're like the circumstances in which you're losing money. You pinpoint what those things are and you try to cut that out of your repertoire, and then you could continue to build from there. There's no strategy, by the way, that's 100%. So what people have to understand about day trading is that you're making a calculated risk based on historical edge and data. So even if you have like a 60 to 70% win rate, those losing trades shouldn't wipe you out if you keep the losses small. Like we were talking about Tony Ivanov earlier, he's got a win rate that's between 30 to 40%. So if somebody told you you're going to take 100 trades, but only 35 of them are going to be green trades, the average person thinks to themselves, well, you're a loser. You lost 65 of those trades. But if 65 of those trades, if the loss was like very minuscule, and then the 35, you're letting those winners run, at least 3 to 5 times larger than what the loss was, you're profitable at the end of the day. So that's where the data comes in. And also keeping like a little journal also helps kind of tie in the data to make sure you're managing your emotions as well.
Excellent. So Bates has an excellent question for you, which is, if we were to just follow you, right? If I was to just follow MyDailyGains' trades, can we expect the same returns if we follow precisely every move that you make in the stock market?
That's a great question. And, there's a lot of people that are looking to find a guru, find a mentor, find a chat room where they could literally just do exactly as you said. The short answer is that you probably shouldn't do that, because every trader has to develop their own style and they have to basically find their own strengths and weaknesses. So what I do is very different than what Tony or what other people are doing in this market. Surely if you have an interest to become a short seller, and I've helped a number of people, not only in TradeBuddy, but also just people on Instagram who have reached out in the DMs. I help people through the process of transitioning from being a long bias trader to get into short selling. And so you should never copy somebody, but you could get a sense for the kind of things that I'm thinking. And then if it makes sense to you, if you agree with my approach, then, there's some people who, I'm not going to say they follow me to a T, but they see what I'm posting and they take it to heart, and they have similar trading styles, but no one is following like to a T. It's just not recommended, because at the end of the day, it's a career, right? So you need, like, what happens if I decide to quit the business tomorrow? Then what? You have to learn how to become self-sufficient in this field, for sure.
Yeah, so I just want to make a mention of something that's kind of tongue-in-cheek and fun. So when I was pursuing day trading, so some of you know that the market approach that I ended up settling upon is swing trading, where I trade from a few days to a few weeks, typically. So my typical hold time is about 2 weeks at this point. But there was a time when I was pursuing day trading, and I would put an alert out in the chat of either something that I was interested in. I would see MyDailyGains post that he was short. He was going short in the same stock multiple times. And I actually counted. There was, out of the 7 times that MyDailyGains and I were in the exact same stock at the exact same time, 6 times I lost. 6. So it was a MyDailyGains indicator. Every time, like, I either shouted something out and I saw MyDailyGains say the same thing on the same stock, because I was going long. So I was buying low, looking to sell high, and MyDailyGains is a short seller, so he's looking to sell high and buy low. And so whenever I saw that MyDailyGains was targeting the same stock as me, I learned to take my foot off the gas, because I got to kiss the ring. Like, just I lost.
and let me ask you, actually, when you saw that happen, like not only once, but as you said, 6 to 7 times. Did it ever cross your mind to like join the dark side of trading? And I think you asked me about brokerages and stuff like that. Did you ever like formally want to like make the leap into shorting? Or
Yes, yeah. So I'm still very interested in shorting. I never did. So like recently I got very bearish macro on the stock market, and I've been looking into taking longer term shorts, but I've had trouble on the Thinkorswim platform. I'm trying to use it to short, and like I know you use the broker you use is Centerpoint Securities, right?
No, not. They're not taking Canadians anymore. They had a 3-month window where they were, and I know a few people that went. But no, I'm with Trade Zero, so I'm offshore, Bahamas based.
Oh, okay, yeah. So essentially, I haven't been able to figure out how to short. I want to short, and I have short ideas, but I haven't been able to actually get it done. So one day.
And to get back to that mention of what was going on in the chat room, I don't know if you noticed, but whenever I'm announcing like a possible short plan, it never really clashes with like Tony, Aston, and some of the other long bias leaders of the community. It never really clashes with what their long plans are. It basically, like when they are done with the stock and where they are selling the stock is kind of where I'm like today, for example, on VTSI, I was busy this afternoon, but you know that I like to jump in short at around that $10 mark. It topped out at 10.17 before it dumped back to the mid 6s into after hours. So,
oh, that's awesome! Wow,
you know what I mean?
That's nice.
Yeah.
Yeah, so I mean, I learned that there was something wrong with my market approach by like seeing that what I saw, I knew that my eye was bad, and ultimately it led me away from day trading because I realized that I was just not good at it. So, but
you got to find your niche, and that's basically the truth is that day trading is really not for everybody. It's not an easy thing, right? So there's day trading, there's investing, and
absolutely. Yeah, so Griff asks a really good question. At Calliopian Club, we've had events covering technical and fundamental analysis. Do you lean on one more than the other?
Very good question. So I do check fundamentals more loosely. Like I'm more interested in like the float of the company. I'm interested in the institutional ownership percentage and the short float percentage. And
what is short float?
Short float is how what percentage of the overall available shares of this company are currently short biased? So how many people are betting on this stock going down, essentially, versus people that are holding the stock in hopes of it going up? So in my case, a short float above 20% is considered dangerous when there's a pre-market gap up, because people who are swinging short, they're going to wake up and they're going to see that they're losing money. So they're going to have to cover their position. Covering is a buy order. So they're going to be adding buy orders in pre-market to cut their loss. Plus you have longs jumping in. So that causes what's known as the short squeeze, which, as you know, is a dangerous thing if you're a short seller. You don't want to be in a short squeeze, because that means that you are losing money. And institutional ownership means how much of this stock is owned by larger players. Like in the small cap sector, it's more like, Goldman Sachs and those kind of hot shot firms. And whenever I see institutional ownership above 40%, I get a little bit nervous. I'm not going to not trade it, but when I see institutional ownership like 80 to 90%, I avoid it, because they have such a way of manipulating these stocks that it's very hard to be on the winning side unless you're thinking exactly like them, and you'll never know what the hidden agenda might be. So I try to avoid that. But yeah, I do focus more on technicals and the kind of basically the price action. So real time, what's happening, how does the price react at this specific level, and are we seeing big sell orders hit the time in sales at that level, or are the bidders stepping in to try and push it higher? So fundamentals for me is more of a bonus. Like if there's dilution or rumored offerings and stuff like that, it's nice. It might add a little bit more confidence to my short position, but technicals and price action is king.
Awesome. So
the momentum.
Right. That leads us into Sturjara's question, which is, what is your opinion on GameStop and the GameStop short squeeze, where, of course, the GameStop stock had over 120% short interest, meaning that more shares than existed were taken away for the long traders and was locked up for shorts to borrow to buy back later. What is your opinion on the GameStop short squeeze, and do you think GameStop is a good stock to day trade due to its volatility?
So I think the fact that you mentioned, like the 120% short float, I do think that there's something wrong with that picture. Like, I don't know if it's something that should even be allowed. How could you lend out more shares than exists? That's kind of a strange concept to wrap my head around. And I mean, hats off to, people that got together, and it wasn't just like an overnight thing that happened in January. I heard it was a development for a couple of months, things that were going on at the company, a believer in the company to bring GameStop into a more like digital space. And it really gave the hedge funds a scare, and in some cases, huge losses. And it is what it is. It's a free market, and I think people who were entering the stock, they were disclosing that they were entering. So I don't think there was any crimes committed there or anything like that. But I know the SEC is looking at it, and yeah, I mean, volatility, it brought a lot of attention to the market. It created a breed of new traders. So it's nice to see new people stepping into the markets, people that are interested in this. And hopefully, people didn't throw their life savings into this and lose, because then they won't have a chance to become a day trader. Hopefully, if somebody jumped in, they were just doing it with money that they could afford to lose. And I don't know. It's a little it's a rough introduction to the markets, if you ask me.
Yep.
If you're interested in the stock market, you should not be trading that. It's too volatile. You should look at more, stuff that moves like $1 or $2 per day, not stuff that literally has $50 of range. If you're inexperienced, that's too dangerous for you to be in.
Dude, I was pleading because the Get Money Club was going absolutely bonkers at the time. And I was pleading with everybody. I was like, guys, This is not what you think it is. Most of you are going to get your asses handed to you. And lo and behold, that's precisely what happened. The experienced traders made money and the new traders got burned because they just they didn't know that they had to have take profit prices and stop losses, and there's a disciplined approach to it. So I really appreciate you saying that. So if you are experienced, do you think it's a good stock to day trade due to its volatility, or should people stay away from it?
If you are experienced, you can trade it. I actually know a guy who trades it almost every couple of days, but he's a professional. He's got a good read on the order flow. He knows where the mammoths are unloading and that sort of thing, just based on a decade of screen time, that sort of thing. And even him is using small size on that stock because you don't want to be, it's an expensive stock. So you can't really be positioned in that stock the same way you would be positioned in a $10 stock. So you have to size accordingly and realize that it definitely can be volatile. So I think on day 2 of that run, there was maybe one good long entry where it retested $65 to $75, which was day 1's high a day, like the Tony Ivanov special. And there was a good entry there on day 2 at around $65 to $75. Don't quote me on that exact price there, but the retest of that day 1 high. And then from there, it kind of went wild. But I don't think I would have entered. I feel like it would be chasing, trying to buy that thing at $200. I'd be I don't know. It'd be tough.
Yeah. So, did you trade it?
No, I did not. I actually, on day 1, just for fun, just for my own knowledge, I wanted to see what the short locate cost was, if I wanted to short it. There were locates on day 1. So at trade 0, you could have shorted it on day 1. But every single day after that, for the next about a week or maybe longer, you were not allowed to short it not allowed to short it at trade 0. And a lot of these places like Robinhood and whatever, they were restricting their users from even trading it at all. That's a whole other story, which could be a whole other episode. But actually, funny thing is that I went to the Sympathy play, which was AMC. AMC got hammered at $25, and there was a lot of good action on AMC. And in about a span of 3 or 4 days, I managed to get $1,000 off of AMC. Excellent. So nothing crazy, but the Sympathy play is less stressful than the main play. That's another little
What
tip
is the Sympathy play?
It's basically you have the main event, which is GME. It's GameStop. It's the one that's the most viewed, the most talked about. But AMC was also another meme stock that was kind of running in tandem with GameStop, but it wasn't the number 1 most popular stock. So it could be the second one or the third one, KOSS was another one. Was trying to be pumped by Reddit. And so those, maybe not cost because it's a microfloat, but but those Sympathy plays are usually easier. Even with this latest NFT craze, is same kind of thing. Coronavirus plays, the shipping plays back in 2016, I think it was. Sympathy plays were lower risk.
Excellent.
That was before my time, though, the shipping one.
So you talk about discipline and creating a plan pre-market and executing your plan during the day. That's something that you definitely preach often in the TradeBuddy community.
Right.
Griff asks, how often do you deviate from your entry and exit plans, if at all?
It's a good question. So, at the end of the day, we are human, and we might see something gap up, and we may want to jump into that stock with a feeler, so a very small starter position. But you do have to try your best to stick to that plan. So, for example, if I'm saying that I want to short something, if I'm putting figures 950/10 it's basically just a general area guideline. It's not the exact price. Like I mentioned, it's just an area. So what I'll do is I'll throw up what's called fishing orders, which is basically before the stock even gets there, the orders are in the system, so that if it spikes to that area, I'm not putting all my eggs in one basket with like, oh, all my position at 950. I'm breaking up the orders into pieces like 943 and 964 and 988, and then maybe one at 1006 in case it just peaks above 10 and then flushes back down. And so by doing that, you won't always have the full position in the trade, but if it gets to the level that you were interested in, you might have a partial position. So you might have skin in the game on that trade. And then from there, I'm typically pretty disciplined on the exit strategy. Like more often than not, I'll stick to the position and stick to where I want to exit. But every now and then you get, coming from experience, you see some red flags where it looks like it's maybe going to ramp back up. So you're kind of like, okay, I'll just take the rest off here because this looks like it's basing, forming support, poised for another rip. And, I don't want to like have this turn into a losing position. But something else that I do is I use what's called a trailing stop. So when you first enter the trade, you have an idea on where you're going to take the loss if you're wrong. But while the trade is working out in your favor, the stop loss gets changed so that if it curls back around and reverses and wants to push, first I'll have my stop at break even. And then as the trade continues to work even further, then I'll have the stop move down to in the money. So it's like, even if it starts going the other way, you're still guaranteed to make some money on the trade or break even on some of the position and whatnot. So yeah, when I have those zones, it's like you're not always going to be full size in that trade because it won't always reach those exact technical levels.
Right.
Basically.
All right. Well, let's so we're really in the weeds right now. What I kind of want to do is there are a few questions that are more high level, a little bit more fun. So let's. Oh, what's up?
Sounds good.
Okay. Yeah. So let's just do a few fun questions. Like Tom Dynamic asks, what's the best way to use $5,000 of capital?
The best way to use $5,000 of capital, and are you referring to day trading or just in general?
So I'm going to guess that he means in general, knowing him. Yeah. Let's just say in general.
Okay, well, it all depends on what that $5,000 means to the individual. Because if you have like a bunch of other money and income sources and this and that, then I'd say you could throw that into a day trading account, give yourself like a $200 max daily loss, and try to build from there. Of course, after weeks and months of studying beforehand. But if you are really in need of that $5,000 to grow slowly, then there's definitely those like slower ETF funds and that sort of thing. It's obviously not as exciting, not as lucrative, but it's more of like a guarantee, so to speak, because in day trading, there's definitely not a guarantee that $5,000 will double or triple or whatever. You certainly can do it if you put your head down and do the work and show up every day. But yeah, $5,000, I mean, it's definitely enough to get going. But before you get going, you want to educate yourself and really, really immerse yourself in the markets, show up every morning and see what's going on with these stocks and see how they move, because these stocks move so fast. So if you're a deer caught in headlights, you're going to be wrecked.
So Nadia asks, what's the most successful trade you've ever made?
So in regards to a day trade, so I'm not going to talk about the cannabis portfolio because that was something entirely different and it was not a day trade. But in regards to a day trade, it was actually late December. So literally just a few months ago, I broke my my daily record, and it was around 1,300 in one trade. But don't forget that I'm in Canada, so that's almost like $2,000 over here. And it was, I mean, you don't forget it. It was a stock called UUU. And I was short, a couple hundred shares I was short, and the stock basically had to put out a press release saying that they were not aware of the reasons why the stock was as high as it was that morning.
Okay, wow.
which exactly, you know what I mean? Like, which caused a panic.
Uh-huh.
And so the stock went from, I think I was short from like maybe somewhere between $10 to $12 average. And it tanked to 765, and my last exit was in the mid fours. So
wow. That's awesome. Wow.
Yeah, that was yeah. And I've only had, I think, 3 days, and this is what people people misconstrue that, oh, being a day trader is like glamorous and this and that. But the truth is I've only had 3 days in my career where I've made over $1,000 in a day. So, you know what I mean? Like, it's not something that happens very often, because I stick to my rules, I stick to my strategy and my size. So when I have a day like that, there's usually an outlier event. In this case, it was the company stepping forward with a PR in the middle of the morning and causing that panic.
Right.
So
Nadia asks a follow-up question, which is, what is the most unsuccessful day trade you've ever made?
So yeah, on the flip side, I went through like a learning experience back in 2018, where I was still in the process of building my strategy and my rules on the short side. And I learned the hard way that, you shouldn't add to a losing position. You shouldn't pray and hope for the market to bail you out. You can't be sitting there saying, oh, like, please dump, please dump. So I just kept on adding and got squeezed out of that position. In Canadian funds, it was probably close to $1,000. On the US side, more like, after fees and everything, like 500 to 700, somewhere in that range. And it was an eye-opening experience, because I know, like, coming from a corporate environment, I know how hard people have to work for literally $150 to $200, $250. You're working, 8-9 hour days. And so to see just like these sums of money evaporate in a matter of seconds, you're sitting there kind of like, yeah, you have to have some rules in place to ensure that this doesn't happen again. Mm-hmm. And I do have some of those risk parameters now in place, because at the brokerage firm, you can set your max daily loss. So I'm diligent in now following that. And also something that I've done, I've actually, the brokerage firm allows the user to control their max daily loss, which is kind of counterproductive. Like, let's say somebody, for example, has a max daily loss set to $500. They lose $500 in a day. All they have to do is log into their account or whatever, and they could actually change the max daily loss to a larger figure. Then they could go trade some more and potentially lose some more. So what I did was I actually blocked myself out of the website during the hours of 8:30 to 5:30. And I did the same thing on my mobile device. So basically, whatever my max daily loss figure is, you can't touch it.
So Fez asked a follow-up question that is very relevant to this, which is, how do you recover from your worst day in day trading? What does that look like? And Yeah. So how do you recover from taking big losses?
Yeah, it's a good question. And I think what a lot of people don't understand about day trading is that there's a huge psychological component to it. A lot of people compare it to being a professional athlete, where there's like you have to have a very strong mindset, and you have to be able to shake off quickly the bad and quickly forget about it heading into tomorrow. So, I mean, you should still be taking note in your journal as to what was the reasons that caused the loss. More often than not, a large loss is a result of the trader breaking their rules that they have in their system. It's very rarely like the market's fault. And you'll see people on Twitter saying, "Oh, I got chopped up by the algo," or "I suffered slippage because the market makers took me for a ride," this and that, or "the pump room squeezed me out of the position." These are all just excuses. Those are just excuses from those traders, basically them blaming everybody else but themselves, right? The mistake started probably with you using too much share size, using too much money in the trade, and potentially not cutting the loss where you planned to prior, or you jumped in without the plan. Now the trade's going against you and you're a deer caught in the headlights and you don't know what to do. And for every second that you just sit there, every minute that you just sit there and don't know what to do, it could get worse and worse quickly, because these stocks move very, very fast. So you just shake it off. You journal what went wrong, what rules you broke, and you show up tomorrow, you show up the next week, and you don't repeat those errors. And I immerse myself listening to podcasts, trading podcasts, trading psychology podcasts, Mark Douglas, YouTube seminars, where sample size approach. It's not about your next one trade. It's about your next 100 trades. And as soon as you start thinking like that, you won't really have massive losses. You'll have a lot of small losses, but that's okay, because you'll try your best to let the winners run, and the winners should, as we discussed before, should make up for those small losses.
Right. Yeah. Just wanted to read.
You got to be strong.
Yeah. MDG mentioned that a trader that has a 30 to 40% win rate, but is still profitable in the market because of his risk to reward ratio. Like, he loses very little on those 60 to 70% of trades and makes a lot on the trades that win. That's actually my market approach too. My win rate is 50% as a swing trader, but my average,
Nice.
it's roughly 3-to-1 risk to reward ratio that I have on my winning trades. So it makes up for the fact that I lose half the time. Like, half the time I'm just wrong. So Fez also asked, which books elucidated trading for you? Like, what books would you recommend? What were important to you?
Yeah, so it's always a nice recommendation to start with Trading in the Zone and The Disciplined Trader by Mark Douglas. Those are some great books to start off with, just because it gets you thinking like a pro trader. It gets you on the same wavelength as, like I just said earlier, that your next one trade should not have significant importance in the grand scheme of your career. I used to have a Post-it hanging off of my laptop, which said, "Don't let one trade ruin your career," because there's no reason to. If you live to trade another day, like, just cut the loss. And so many people struggle with that. It's like easier said than done. There's like 90% of people, the turnover in this business is like 3 months, 6 months, 9 months. People don't last because they get married to their position, and there's no reason to. I tell some people that I say basically re-entry is only one commission away. In some cases, commissions are now free. So no excuse not to cut that loss.
Exactly. Yeah. So Kaboom asked what could possibly be a personal question for you, which is how much money on average do you make in a week from day trading?
It's a good question, and I don't mind talking about that stuff in this forum. It does vary. I typically have like an average green day that goes anywhere from like 125 to 250 US. That's like a typical average green day. And that figure kind of fluctuates here and there depending on, market conditions, depending on the sectors of small cap stocks that we're seeing. So like when there's a trend that most of the stocks are getting hammered and I'm a short seller, my daily green day average goes up to like 300 to 400 for like 3 weeks straight. But when things cool down on the short side and like every stock is like ripping and holding and squeezing and this and that, that's the time for me to take my foot off the gas and say, okay, I could just maybe take my scalp and run and lock up that $100 day and be done with it, because I shouldn't be involved in a stock that's strong, So yeah, I mean, that's basically what it's at. So a couple grand a month is the usual. There are months that are worse. There are a few months here and there that'll like hover around like 7 to 10 grand, but I've only had maybe 3 or 4 of those in my career. So when those happen, it's pretty sweet. But obviously, the goal is long-term growth. So I don't want to like throw down and go crazy every single day. You need to grow this thing slowly. And that's something that a lot of people don't realize, is that this industry is a marathon, not a sprint. So there's people that are marketing like, oh, get rich quick and this and that. It's really not true. And, I think that's what drew you to Tony's community in the first place.
Yep.
He wasn't promising anything or wasn't saying anything remotely similar to that. He was just showing his process and that's it.
Right. Yeah. So we're a little bit over the hour point now. So what I kind of want to do is I kind of want to chill out on the AMA side in the sense that I'm just going to. I think we've covered a lot of ground. There's of course still many questions. What I kind of want to do at this point is just kind of like open up the chat room. Valency, is that possible? Like where we can just have like kind of like a more relaxed just discussion at this point.
Definitely.
Okay.
Let me just unmute everyone.
Yeah. Well, with that being said, I do want to thank you, MyDailyGains. This is awesome. Your perspective is special, because in a world of a lot of fakes, you're the real deal, and your perspective is very valuable. So thank you.
It's my pleasure. And like I said before to you in private, it's an honor to be here, considering what this community is doing here on Discord. So thank you. And I do want to apologize if I ever said things that maybe were not understandable with regards to the trading lingo. And if there's any questions about anything that I said with regards to the trading vocabulary, don't be shy to send me a direct message and I'll clear up anything, or in the comments if this is going on YouTube.
10-4. Yeah. So, genetic Griff. I know Griff, you had some other stuff. Daz, just talk. Don't get shy now.
Can you hear me?
What's up, Daz?
Wait, can you hear me?
Yes, sir.
Oh, okay, because I wasn't sure if I was on. I was actually just wondering whether you've day traded with futures or even with options.
Good question. I actually listen to a podcast called Top Step Trader, or Top Step, on a regular basis, where like the hosts of that podcast are futures traders. But I actually don't trade futures. I never have. And I've never traded options before, but I did want to take some time one day to learn the option, because options is a whole vocabulary and lingo in itself, the whole other thing. I do want to learn the basics of it, but I feel that this is the kind of industry where you want to be like, you want to be like that NBA player that's like just throwing the free throw, or you want to be like Alexander Ovechkin taking the one-timer on the power play. You have to find your strength, and once you do, you just rinse and repeat. So there hasn't been really a reason for me to really dive into futures, but I'm intrigued because, like I said, I listened to a podcast and it sounds interesting. So yeah, I'll never say never. That's for sure.
Thanks for the answer.
Oh, my pleasure.
Hey, so as a fellow Canadian, what kind of advice do you have for investment vehicles? So like, do you invest from like a retirement savings plan? Do you invest from a tax-free savings account? Maybe you can elucidate some American equivalencies or perhaps European equivalencies. Because I know people like to talk a lot about investing this, investing that, but there's a sort of practical outer element to it, which is like your taxes, and what. Maybe I guess that's more accounting, so to speak, but perhaps you can share some of your experiences with that.
Yeah, and when it comes to that sort of thing, I'm not as actively involved with the selection of stocks themselves. I do go to the major Canadian banks, and I let them handle the portfolio with like a mid-risk growth projected plan, just because day trading is very high risk. So I rather handle my own stuff that's considered high risk and let those banking professionals handle the stuff that I'll actually need to worry about for the retirement years and that sort of thing. When given the opportunity, though, I do recommend that you do it in Canada through the TFSA, the tax-free savings account, because those gains are sheltered. And actually, when I was involved in the cannabis sector in late 2017, I did those transactions through a TFSA. So I did not have to pay anything on the tax side on any of those gains, which was obviously very, very sweet. In the terms of registered retirement savings plans, I mean, when you sell RRSPs, you have to declare that as income on your tax returns. So, in Canada, I mean, you could use up to $35,000 of your RRSPs to use towards as a down payment on your first house, which is kind of cool. And then you could pay it back over 15 years interest free. But if you're just selling or liquidating your RRSP fund, it's not really a great idea because you're going to have a higher income it's going to show that you have a higher income. So if you didn't pay enough taxes, you're going to owe money rather than get a refund. But yeah, that's getting into like some accounting kind of stuff. So definitely stick to TFSA if you are going to select some longer term stocks. Like if you invested in some like larger caps a while ago, or you're looking to do that now or in the future, doing it through the TFSA. In Canada, you could do that through your banks, or you could look in Quest Trade or Interactive Brokers.
How much do you set aside for your TFSA, or do you just max it out every year?
I definitely try to max it out every year if I can, because the number changes every year, and you also have the ability to, let's say you did not contribute over the last couple of years, you would have like a maximum amount that you're allowed to just kind of put in as a lump sum without breaking any rules.
Cool.
So yeah, I do try to contribute it to like every few weeks kind of thing.
Neat. Thanks.
Yeah, my pleasure. I try to take trading gains, which like I said, came from the riskier stuff. And then I try to park those trading gains into the mid-risk growth ETF fund through one of the major banks in Canada.
So do you sign up for like mutual funds?
I don't know if you heard of Tangerine. They're owned by Scotia.
Mm-hmm.
So I have products at Tangerine
Okay.
and products at also Desjardins. You just heard me say a French word, French accent there.
Yeah, I got you.
Montreal native, so yeah. Yeah, so yeah, it's try to diversify too. Like I just bought this house over here, but I held on to the condo to try and build that real estate portfolio up as well, rental property. So try to diversify because yeah, day trading, like it's too stressful if it's like all you've got.
And I get the impression as well is that it's sometimes there's a sort of level of fundamentals when it comes to financial. And then like I started with reading like Millionaire Teacher and The Wealthy Barber. And so that give like a foundational presence, right? And when I look at like the day trading stuff, that's like another tier or a different level of like domain specific knowledge. And I find like people skip into day trading without necessarily understanding like the fundamentals, which is like sort of saving principles and setting aside an emergency fund and perhaps thinking more long term, because I guess it's more romantic in that sense, or I guess there's more opportunity for gains in day trading, or not just day trading, maybe even swing trading.
Yeah, and it's as you said, like I don't think people should just take a big chunk of money and just dive into day trading without having those other kinds of funds or savings or backups. Yeah, there you go. And also it's like people that just dive into the day trading world and they have nothing else, they're putting too much pressure on themselves to succeed early on. And there you go. And it's just like, you want to be able to make a mistake here and there without having to worry about like paying your mortgage or whatever. So yeah, there's no rush. Like the market's always going to be here. So like you said, day trading has its own set of lingo, has its own set of terminologies and skill sets required. And it really is like a professional environment. Actually, one of the guys that I was in his community very, very early on, Cameron Foose, which he no longer trades small caps anymore. One of the things that he said was people that jump into the markets without any kind of experience, it's the equivalent of somebody buying like a regular car and just showing up to the NASCAR track and saying, "Yeah, I'm gonna jump in this Indy 500 or whatever they're called, and I'm just gonna try to do a couple laps." You're going into a professional environment as a beginner. It's just not going to work. People are going to drive laps around you.
Great example.
Is there like so when you say when people are going to drive laps around you, I guess in a sense, doesn't that sort of imply that there's some sort of competition in a sense? Sometimes when I look at trading, I don't get the impression that it's always competing. It's more that there is some kind of zero-sum element to it.
Well, there are definitely things going on. So first and foremost, like you should always be just competing against yourself. So you're keeping you want to be able to perform on an individual level, like day to day, week to week, month to month, that sort of thing. But then on a grander scope, in the markets, especially in small cap day trading and penny stock sector specifically, there are a lot of games that are being played by whales, by larger players, market makers, funds. They see everybody's orders in real time. They see everybody's stop losses in real time. And I mean, you could ask anyone who's been around day trading for a while, but it's not uncommon to be kind of shaken out of your position at the hands of what looks like manipulation. Like they go and they grab your stop loss and then they rip it the other way, whichever way that may be. So you got to just be mindful that while you're competing against yourself, you're immersed in an environment where there's other people trying to take money from the unsuspecting newer participants.
It's sort of swimming against the tide. Like there's people that know how to swim against the tide, and there's people who don't, and you're just gonna, I guess, get caught.
Yeah, exactly. You almost like the more screen time you put in, the more you start to pinpoint where those games are being played, and the more you could actually try and trade like the whale, try and trade like the algo. Where will the algo trap the long bias traders? Where will they dump it? At what price will the other side of the trade be underwater? And that comes down to like trade psychology and screen time, pretty much.
I'm curious, like, do you ever like how do you factor in like your personal spending with your day trading? Like, do you just like think like, oh yeah, I'm not going to buy this Coca-Cola because that could be like one extra penny stock? Like, how do you factor in your personal spending philosophy with your day trading?
I mean, I don't try to think about that too much. I guess I'm known to be like a little bit frugal, and I'm not out there. Blowing money every weekend. And I'm rarely going to like fancy restaurants and that sort of thing. So I do think that I don't associate like the everyday stuff really with monetary things in trading. But what I do is like if I'm having a good couple week stretch, I'll wire out the gains from that stretch, and I actually will go and make like what some would consider an unresponsible purchase, just to remind myself that this is real money and that you've earned it, and you should treat yourself every now and then to things.
Yeah, it's pretty healthy because I can definitely see like that sort of spiral down until like that loop of spend. Like, every dollar spent is $2 saved is what I've read, right? Because basically, I guess it's like a general rule of thumb when it comes to like long-term saving, because interest and funds and whatnot. Yeah,
you should always put some away into the safer stuff, which is what I try to do. With the whole ETF thing and the TFSA thing that we were talking about, like you should always try and do that whenever you can. You have a big month in the markets and you could dump some money there, and you should. But at the same time, like you see some of these traders that they literally work their way up to like $100,000 or even more, and they don't treat themselves. They don't do anything to enjoy it. And in some cases, they end up like losing like half of that money or a big chunk of that money on like a really bad trade. It's like, yeah, you should have paid yourself along the way. You should have given yourself a couple of paychecks. Like I see it happen often on Twitter and in stock twit,
Wall Street bets.
Do you say publicly or
more silly?
Do you say are you as a percentage, like how much you keep in ETFs and how much you play with for your day trading?
I actually don't have exact figures, but a fun fact is that I actually don't use like a very large sum of money in my day trading account, because the current system and rules that I have are built specifically for like positions that are not considered too massive. I am trying to grow that over time, but in order not to put like crazy amounts of pressure on myself, I feel like there's no need for me to trade with like more than 10 grand US. You build up the account a little bit, and then you wire out and you reset to that. Figure. Like some people, what they do is they just try and grow and grow and grow and grow, and then they never pay themselves. And then some, you get overconfident, and then you could run into issues. So I try to be diligent with this sort of thing, and try to treat it like the profession that it is.
I've been
I talk too much. Go ahead.
I've been a big fan of the 90-10 split, just like doing swing trades with 10% and long-term ETFs with 90, and that keeps my sweat equity really low. But I can imagine even if a small percentage is what you're day trading with, the sweat equity would still be pretty high, because that's what you're making a living off of, I guess?
Yeah, I mean, I do consult for another business or two, and I run social media accounts for 2 companies right now. So it's like there's other income coming in. And that's also an important thing to mention, where it comes back to alleviating pressure and not having, like, if day trading is like your one and only like income source, you're going to have higher pressure on you. So if you do have like a side hustle, if you do have a job where you go in the afternoon or you go in the evening, and you could at least make yourself free for that pre-market session from like 8 a.m. to 10 a.m., you're there for the prime time, you're putting in the hours when you need to be, you're not going to have that high pressure to draw income from it. But yeah, I don't have to put too much pressure on myself because of those other investment channels that are kind of working themselves out. And I mean, I just turned 30 like quite recently, and like I had a property when I was 21, which I'd saved like for my whole life. I saved the whole down payment for that and flipped it pre-construction when it broke ground, and took those profits and I've diversified from there. So I'm not just a guy that like showed up to the markets and say, hey, let me just throw some money into day trading and try to figure it out. It's like, it's money that if I did blow up, I'll be able to walk away from it and, you know, maybe try again like whenever you can, you know?
Yeah, it sounds like you're very comfortably diversified.
Yeah, and it takes time. It takes time, but like, you know, everything is a marathon. Like, that's what you have to keep in mind.
Good stuff.
Sorry, I have one more.
The hour and 40-minute mark. Do want to be respectful of your time and attention because you're the you're the star of the show. So should we?
We could do a part 2, or if you want in the future.
Okay. All right. Yeah. So yeah, I'd like to take the opportunity to possibly just wind it down because yeah, we've covered a lot of ground and there's a lot more to be said, but. Yeah, I'd like to just take it to the cause, MyDailyGains. He's a special guest on the server. Of course, he's on Twitter and Instagram. I'd like to take further questions there, but yeah, let's keep it moving for now. Thanks you guys for showing up and being a part of this, and thank you, Valency, for your time.
Thank you, Nels, and thank you, MyDailyGains.
Thank you, everyone, and it was a real pleasure. Don't be shy to send a message.